Alright, welcome back to this week's breakout watch list from December 5th to the 9th. In this video, I'll be covering the top 10 swing trading setups to the long side going into next week. Each of these stocks either have strong fundamentals, strong technicals, or volume patterns that lead to uptrends. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Here are the 10 stocks that we'll be covering in today's video. I'll be spending about a minute on each of them, breaking down the stock's characteristics along with the potential buy point. So let's hop to MarketSmith and start breaking these down. The first stock that we'll start with is AEHR. This is a semiconductor stock. The semiconductor group, 95th out of 197 right now, so B- group strength rating. Ideally, that's a little bit stronger, but this one has been leading the market the entire way. B+ accumulation distribution, 96 composite, along with a 99 individual relative strength rating. And it's a little hard to see on the chart here, so we'll go to a weekly one, but you can see we're all the way back to all-time highs at this point, which is great to see even during this bear market. Now back on a daily chart, you can see that the stock attempted to break out on Thursday to all-time highs, but a theme of this bear market has been you do not buy breakouts into 52-week highs because they tend to squat and reverse from there. So although this didn't fully squat, it was still up about 4% on the day. It didn't get out and close in the upper half of its daily range like we would hope to see. And then on Friday, we had higher or lower highs, lower lows, a little shakeout, still above $25. But that's where I want to start building a position, right around $25. You saw on Wednesday, we pulled in and the low of the day was 25.01, so there's buying support at that area. You also have the 21 EMA catching up, so if we pull into $25 and I can keep my stop loss 3%, 4%, and just below that 21 EMA, that would be the ideal entry point for AEHR. The next stock that we have is AMGN, and if this sounds familiar, it's because it's been on the breakout watch list before. This biotech stock, biotechs are the 24th strongest group out of 197. This biotech stock actually has fundamentals. A lot of them don't, but you can see earnings per share have been up. Sales were down 1% year over year last quarter, but after-tax profit margins up 38%, so pretty strong there. Got an A group strength rating, an A- accumulation distribution, 94 composite, and 93 individual relative strength rating. This, on the way up, has 3 unfilled gaps showing power to the upside, 1, 2, 3. And from there, we've pulled back, had 4 weeks tight at this point, pulled into the 21 EMA last week on Wednesday, bounced there, bounced again on Thursday, and then put in a very tight inside candle on Friday, still closing over the 8-day EMA. So with this, I'll be looking for a break over either Wednesday or Thursday's highs, 288.09 as a potential entry point for AMGN. Next, we have the coal stock ARCH. Last week, I put AMR on the watch list. It didn't do super well, but the group itself is continuing to show strength here. Right now, energy coal, 77th out of 197. It is starting to work its way back up in the rankings though. And on this individual stock, you can see very strong fundamentals, earnings per share, positive, plus 76%, sales 45%, after-tax profit margins improved by 21% year over year for that last quarter. On a price structure wise, we did have a nice shakeout under the initial low of 112, then down to 103. So all the weaker hands, would have been myself included, would have been shaken out at this point, coming under that 200-day moving average. We quickly reclaim that and have that breakout move on the earnings day up 14%. From there, just kind of shaking out a little bit, and then nice closing range on Friday, right where a potential buy point would be. Friday's high, 154.40. A couple of other days of tightening up or a shakeout under yesterday or Friday's low would also be ideal for this. This daily bar is still relatively wide, and it trades less than 1 million shares per day. So if that's a liquidity issue for you, you just skip this one. But I'll be watching Friday's high, 154.40 as a potential entry point for ARCH. Next, we have the natural gas IPO stock, EE, and this already had a pretty nice move from this pivot at $27. But as you can see, it went into all-time highs, and what happened? It got sold off, it squatted on that move. Just another example of why we don't want to be buying right at the 52-week highs, but we do want to be monitoring stocks making 52-week highs. So this one made a 52-week high, squatted, was down basically 3% that day, came back to the 8-day EMA. Now Friday might have been the ideal point to buy it right through 29 over the break of Thursday's high. I'm looking to buy it on a pullback, coming back into this $29 area or a little bit lower around that 8-day EMA, so I can keep my stop loss at the low of Friday, which is 28.20, and still keep that within 3 to 5% of my entry point. So with EE looking for a pullback here, or if we spend the first half of the week just tightening up right around 30, now that we've already shaken out the all-time high attempt, then a break over 30 after some tightening, not just on Monday, would be a potential entry point for EE. Next, we have HUBB. This is an electrical power equipment, 50th strongest group out of 197. Has a 91 earnings per share rating because you can see very steady earnings per share growth, sales growth, after-tax profit margin improvement. The stock itself is in a nice clean uptrend with the 200-day, the 50-day, the 21, and the 8 all in the right order. And price coming down to that 21 EMA and catching buying support once, twice, 3 times, 4 times every day last week. Buying support came in right at that 21 EMA. We saw not one, but a double inside candle to end the week last week. And with this, we're just looking for a break over Friday's high, 252.18. That would also correlate with that 8-day EMA. And we could keep our stop loss very tight because we could keep it under the 21 EMA and the low from last week, 247.15 there for HUBB. Next, we have INMD, INMD. And this was a stock that I traded a bunch in 2020 and 2021. Not so much in 2022 after it peaked, broke the 50-day, broke the 200-day, and has spent months and months spacing out here. Now, this isn't the typical chart that I would trade because there is a lot of overhead supply, but I would be treating this more as a swing trade, a shorter-term trade versus a long-term investment because of that overhead supply. But on as a swing trade basis, we're above all the key moving averages. The key moving averages are in the right order. We have the 200-day, the 50, the 21, and the 8. The group is very strong, 39th out of 197, so that's an A- group strength rating. This also has a 96 earnings per share rating with earnings per share, sales, and after-tax profit margins still improving. Within the 75 stocks that make up the group, this is number 1 on earnings per share, number 2 overall composite basis. So fundamentally, technically, it's worth looking at for a swing trade. This got going last week on Wednesday, a nice 7.5% move, closing right near the high of the day. Attempted to run up to 40 on Thursday, but kind of squatted, and then on Friday had lower highs, lower lows, down 1.7%. But take a look at the volume, very, very light volume, more likely just retail selling than institutional selling as it came back to that 8-day EMA. So this is just going to be a pullback buy, breaking over Friday's high as the potential entry point, 38.13 for in mode. I would be looking at taking partial profits at 40. This is a nice clean pivot. We know what happens in a bear market at nice clean pivots. So at least taking partial profits there, reducing the risk on the downside, and then going from there for INMD. Now, there were a lot of biotech stocks setting up, and I did choose a couple for the breakout watch list, but I also wanted to include the leveraged ETF LABU. Now, this XBI is not LABU, obviously. This is the underlying asset, the underlying ETF for LABU. Whenever you're doing technical analysis, you always want to do it on the underlying asset or the underlying ETF. So with this XBI, we're seeing the 200-day, the 50, the 21, and the 8, all the key moving averages, very, very tight within about 1% or 2 and underpriced after Friday's move. So this creates kind of a launchpad setup. Typically, with launchpad setups, we're looking at the 8, the 21, and the 50-day moving average, but now we're including the 200-day, also underpriced, which is great to see. Last week, Thursday had a nice day, or Wednesday had a nice day, up 4.5%. Thursday, just sideways action, down 0.6, and then a shakeout down to, let's see, the low was 81.92, found buying support, and then closed right near the high of the day at 85.66 for a nice 3% move, 3.1% move on Friday. So with this, I would rather buy on weakness as it comes back into those key moving averages, the 8, the 21, 50, 200 day. Otherwise, just buying on strength, 86.50, that's a pretty clean, obvious pivot. I would rather buy on weakness as buying support comes back in. So if we're looking at the price action on Friday, where I would want to be buying, I don't want to be the first buyer in. I want people to prove that buying support's coming in. So we gap down, we push lower, and then we consolidate. And as we're taking out the previous highs on the day, that's where I would be looking for a buyer. So looking for a pullback before that area is exactly what we want to see for LABU for the leveraged ETF or XBI for the underlying asset. Next, we do have another biotech stock, PCVX. I think this was on the breakout watch list a couple weeks ago as well. Biotech's, again, 24th out of 197. This individual stock has an A+ accumulation distribution rating, 75 composite because it doesn't have the fundamentals. This is one of those biotech stocks that's very much just a technical play. And because of that, you do have to size down your positions a little bit. So this one, high type flag, ran over 100% in less than 8 weeks. From there, tightened up, had this nice shakeout to the 21 EMA and buying support holding a round number at $40. So you can see at the low of the day, bounced right at the 21, and then we closed right in the top 10%, 15% of the daily range. From there, we tightened up, and it looked like it was getting out last week on the 28th. Unfortunately, it squatted, closed the day basically flat, but then drifted higher Tuesday, Wednesday, drifted lower Thursday, Friday, tightening this up right around $45. This is one where if it gaps down and then reclaims 40, like an oops reversal, that's a potential entry point and more of an ideal entry point for me, so I could keep my stop loss a little bit tighter. Otherwise, a break over Friday's high, 46.14 is a potential entry point, and then your stop loss has to be under, say, Thursday's low, 44.20. A little bit wider of a stop than ideal, but it's still there for you for PCVX. We got two more stocks for you. This one is PSN and Computer Software Enterprises, 96th strongest group out of 197, so only a B+ or B- group strength rating. Individually, this has an A- accumulation distribution, meaning many of the heavy volume days came on days where the stock was up versus down. 90 composite rating because the fundamentals are positive, and then individual relative strength rating of 95. This does trade a little bit less than 500,000 shares a day, so if liquidity is an issue for you, you just pass on this one. But really nice trending price action, has the characteristics of a stock that I would want to trade, not likely to get stopped out by just random volatility. Recently ran from 40 up to 50, a nice 20% move, very steady, riding that 8-day EMA higher. From there, consolidating, pulling back into that 21 EMA last week, and closing the day right near its highs there. So this is one where, again, another oops reversal would be an ideal entry point because then we could keep our stop under the 21 EMA and still keep it tight. Otherwise, just breaking over Thursday's high, 49.78, maybe just call it $50. I would probably try and weasel in a little bit earlier just because 50 seems like a pretty obvious pivot. There might be sellers there. So I would rather get in a little bit before that so I have a profit cushion going into that area. This is PSN. And the last stock that we'll cover today is SLB. This is in oil and gas services, 31st strongest group out of 197. Very strong fundamentals in all the oil and gas names at this point. But structurally, we had this nice big cup. Did not undercut the lows, so not a double bottom in this cup, but still moved higher. Broke over all the key moving averages. Now those moving averages are in the correct order. 200-day, 50, and the 8 and 21 are right on top of each other, showing that the stock's not already extended at this point. Oil and gas has had a couple of gap downs the past 2 weeks, so it is a more news-driven type market. If that's not for you, it's not for you, that's fine. But both times we still rally to close high in the range in that area. So undercut the 20, undercut the 21 EMA, but by the end of the week, we closed back above the 21, back above the 8-day EMA. Ideally, we do pull back just one more time for maybe a day or two to tighten up, and then we could use the break over Thursday and Friday's high right around 52.90 as a potential entry point for SLB. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a favor and leave a like and subscribe to my channel. I make this breakout watch list video every weekend along with other trading related videos. A big thanks to MarketSmith for sponsoring this video. MarketSmith was the trading research platform that we were using to break down each of the setups. So if you like what you see and want to give it a try yourself, there's a link in the description below. And finally, if you want to hear more from me throughout the rest of the week, you can follow me on the other social media sites. I'm at Nick Drendel on Twitter and at Nick_Drendel on everything else. Have a great week and I'll see you guys in the next video.